Welcome to TradeTheNBI.com. This is John. This report is for the 2nd of July. Coming off the summit of the G20 and that, we had the jump up in futures, led to a nice little pre-market pop was most of the action. And then by the time we got into the middle of the day, everything just sort of got softer, and then boom, we traded down and then bought back up towards the end of the day to finish right near the exact 100% previous level. We've made a new high. We're just modestly off at this particular point. But you can see that we've had the cyan move under the red on that giant gap up. But with the softening of midterm buyers here, probably going to get a little bit of consolidation. We would still expect this to continue to the upside because we already had seen the improvement in the histogram from earlier on. Now the question will be, we're looking for when this azure starts to meet the gold there, and that usually is the indication when we begin to look for actual weakening signs that may actually trigger softness. NQ still behind NASDAQ, not making new highs yet, but still acting in concert with the S&P. Just that's the same exuberance. You can see we're really close right there. So there's still a little disconnect between the markets. Some of that decline happened because of this the euro fade, and again people realized, maybe we got it wrong, that there really isn't going to be all of that great a setup, but we already knew this was coming because of the positive extreme right there. All we had to do is look at that red dot. In fact, I did mention it before, so not a huge shuckaroo there, but again, already with a reset. So the question now is a matter of looking for that crossover point with the steel. If things continue to fade, this is quite a separation between the green and red. So I would expect we might see a little bit more decay out of this before it's all said and done. The question would be, will it pivot above this current reading or break down a little bit lower, in which case we might see return all the way back to the lower levels. And particularly since Europe continues to show no ability to prosper, get anything done, the fact that bonds are remaining at this exalted level, just an indication that there's still this expectation that rates are going to be either falling or holding steady. Mostly that's a projection of falling. And that's just a question of how much influence Trump had on the Fed to see about getting them to change policy, because they certainly were in the opposite direction until he really started coming after them. From an oil standpoint, we're still, we've achieved a little bit better than the 50% return from the original decline here. Again, it's just one of those supply issue situations. Yes, you still have the tensions, further ramp up of rhetoric, but it's tough to justify that that's going to be significant enough given the ability of U.S. shale to just turn it up as needed. And from a gold standpoint, again, that's softening. Well, there's plenty more positive extremes, but this was the breakout move and it just retested itself. And that started right here when we dipped below the 13.5, because it's effectively just like a cross from the top, if you think of it from a cylindrical standpoint. So we'll see if this is able to really start to shift, because you still have significant red DOC above zero, and could be peaking out early. So because again, the cyan is only going to go so far higher here. So as soon as this starts to turn down, you're going to get a rebound move on it. Kind of typical with that. So from a 5K standpoint, you can see the previous buy from the Friday action, and then boom, gapped up, and it was just a continuation move. There was nothing. I was more than happy to be long going into the weekend given this setup, and boom, took off. Now, what I'd mark here, this is interesting because obviously with the magenta above the 15, and in this case above 25, there's nothing to touch in this first reset other than to recognize it as the potential for a rebound. And you can see if you follow the gold cyan met, that's what led to the very bottom out, but you had this extreme move below the negative 13, and as soon as it popped back above the negative 13, that led to the move right back up. And so that's kind of what I look for in those particular cases. Now, as we get further along, coming into here, you're still looking at this plus 25 range with the magenta and that. But what I start to look for is the lower extreme, the lower shakeout histograms here. And by the time you get to the second one, you still don't have any potential signal with that. But by the time you reach this one, if you want to be a little bit aggressive, you've got to move below the negative 13.5 with the DOC spread and the violation of the ABM yellow. So to me, that was the first indication that there was a potential for movement lower. Now, of course, that reset here, boom, comes across, gives you, okay, you've got your crossover right there. You didn't get the dip of the orange below from a buy standpoint, so you know it's going to be short-lived. So from my standpoint at that point, I'm then looking for, boom, in this particular case, the reset breakdown of steel crossing below, and you already had the green fading and red was already coming down, and you kind of get a confirmation. You can see at this point the shakeout that has moved negative, and that led to the precipitous retrace of what mostly just filling the gap is what they did. Right there's the start of the gap. Gap gets filled. Once that takes place, then it's just a matter of looking. Oh, that should be yellow. My default color is the dark one, so we'll just change that to yellow because that's what it should be. And that led to the move right back up to declining highs. So just like we look at the rising lows as a pull down like it did here, because the zero did meet the bottom of the Morganacci line. Likewise, when you have falling highs on a stable low, your expectation is that you're going to meet that high. So the question is the Morganacci line meet first, or does price move up to catch it? This is where you can kind of get some guesstimations on potential return. And in this case, pretty much has filled back the breakdown point, which took place right in there. And that was pretty close to where the high peak was. We're probably going to get a new run at high before the market opens here. So this was, I think, a great way to take a look at it. You can see the inversion between the two, where steel stays all the way below the red DOC, and then at the inversion point flips above, and then stays above until we get the complete dip down crossover right about here. So even if you're late on something like this, I don't have an objection, because you know that you're looking for that rise to that 100% mark coming through. So it's one of those whether you can play it cautious. For me, still, I've been short though. I'm going to be covering once you get into this kind of improvement on a break of the 23. And that's just a practical view. Nothing wrong with understanding the best course on that setup, particularly when you're looking at these extended crossovers, and that it can help you stay with the trend when you're following it through, especially when you have this kind of a solid range, where until it was right about here, gotta get on top of this one right there, where it crosses above, you might start to expect to see some bounce, and that's where I'm definitely looking. So even at that area, I'm starting to be more cautious with where my stop comes, because I'm expecting a P2 pivot, which takes place right here at the bottom. And that's when you know that you're probably likely looking at some extended improvement. So as always, I will put up anything relevant as it pops up, but trade well. We'll talk again later.